Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 28 and we're starting from euro-dollar pair with Evangelos Paulakis. Yesterday, the bears failed to confirm and continue the decline initiated the day before. As a result, the attraction and influence of weekly levels 1.082939 restrain the development of the situation, which may contribute the formation of consolidation. The remaining benchmarks of this market segment today maintain their positions, so the manifestation of activity may lead to their testing. Thus, BAS still awaits support in the area of 1.0796, weekly medium-term trend, plus lower boundary of the daily cloud. While on the path of bulls, the resistance zone of 1.0862 and 1.0866 remains. On lower timeframes, the advantage remains on the side of bears. The market continues to explore key levels, which today are at the levels of 1.0826, central pivot point of the day, and 1.0840. That's a weekly long-term trend. Overcoming key levels can change the balance of power. In the case of movement development, other benchmarks today will meet the market at 1.0797 and 1.0783, support of classic pivot points, and 1.0855 and 1.0870, resistance of classic pivot points. That's time for GBPUSD. Tin Lao presents. The volume of short positions on the GBPUSD pair decreased the level of 1.2600, leading to a slowdown in the downward cycle. On the 4-hour chart, the RSI moved near 50-meter line, thus reflecting a possible flat. On the same time frame, the alligator's MAs are headed downwards, indicating residual signs of the downward cycle. In order for the pound to fall further, the price might settle below the level of 1.2600 by the end of the day. In this case, it could extend the current corrective cycle. The alternative scenario considers the area around the level of 1.2600 as support, allowing for a rebound in the range of 2600 and 2650. In terms of complex indicator analysis, indicators suggest trading in the range of 2600 and 2650 in the short term and intraday periods. And finally, here's Laurie Bailey with USDJPY currency pair forecast. Let's have a look. The USDJPY pair continues to consolidate between the levels of 150.80 and 151.95. Time plays on the dollar side here, as the time spent on consolidation at the peaks increases the likelihood of further growth. In addition, the modern oscillator is moving to the right in the uptrend territory. However, the bears have a chance to take control of the situation by pushing the price below the level of 150.80. Today, there is a reason for this: the final estimate of US GDP numbers for Q4. However, this report could also support the dollar, so the price has an equal chance of breaking above the resistance at 151.95. Consolidation above this level will open up the target of 154.25. If the market suddenly feels the risk of such growth prospects, as the Bank of Japan recently warned of currency intervention, then the yen has a chance to stay in the current range, waiting for more significant events to break upwards. The USD-JPY pair has the unique ability to develop a narrow range sideways trend for several months. However, if the yen consolidates below the level of 150.80, it may reach 149.72. Next, the price will have to deal with the MACD line. On the 4-hour chart, the price has fallen below the balance indicator line. The Marlin oscillator is in the downtrend territory. Their circumstances increase the probability of an attempt to break below the support area of 150.80, towards which the MACD line is approaching. Therefore, overcoming the support at 150.80, according to the data from the two timeframes, has a slightly higher probability than breaking through 151.95. That's all for today. See you online soon, and good luck.